Dennis, did you buy Home Depot at $87 yesterday?
Wouldn't that be pretty cool if you had a bid out there? It would have been cool for about 20 minutes before they busted the trade on you. Yeah, that's right. The NYSE came in and busted all the trades on Home Depot. If you just want to go and show the chart here, Joel, of the Home Depot trading action, because it was pretty crazy there with Home Depot trading down all the way down yesterday to where did it get down to 86 and change? Because
Yeah.
my chart's already adjusted.
Oh,
But
really?
what was the low?
Well, my one of my platforms has adjusted it already. Let's see what we can find on this other platform, and I believe here the low. They're not even there. I think it was 86.77.
So looking at 86.77 is the low there. Yeah, I can see it actually. You can see that it's already adjusted there too. So what happened here basically near the end of the day, we're talking around 9 or at 3:55. Order comes in, huge order sent just to the NYSE, so it routed around other exchanges and slammed out all of the liquidity on the NYSE, knocking this thing all the way down to the lower circuit breaker. And this was instantaneous. The stock was at 96 bucks and instantaneously traded down into the 86 handle, all in the same, just knocked out all at 92, 91, 90, 89, 88, 87, 86, all the way down to the 10% circuit breaker, because that's where the circuit breaker is, the limit up, limit down on Home Depot. Traded down there, immediately back up, immediately seconds later trading back at 96. So they look at that, and that falls under the erroneous trade policy of the NYSE. And they have guidelines, and those guidelines are if a stock is above $50 and falls more than 3% in a 5-minute period, and there's no news, they typically will bust everything below 3%. It's exactly what they did. They came in after hours, analyzed it, and they busted everything below 93.33. So when I say bust, it means they canceled all the trades below $93.33. So if you bought it at $93.32, you would have your trade busted. If you bought it at $93.34, your trade would stand. So that means you would still be good to go. So that's how these things work. Those guidelines are, I can send a link into the chat, but there, if you just Google NYSE erroneous trade guidelines, you'll find it fairly quickly. That's something to consider. If you're putting out very low orders out there and it hits you all of a sudden, you think oh yeah, I'm making money instantaneously on this, they can come in and bust those trades.
And do you know how big the order was?
I actually didn't write it down, but it was sizable. There was some huge size trading down there at 86. So you're talking, I think, in the tens of thousands or hundreds of thousands of shares. So it was a large order. We could go find that out. We could go add up all the shares, but it was sizable. So I mean, very large order. Probably a fat finger. These things are usually typically caused by a fat finger, and this is the big deal with these flash crashes and why you see them happen so often. Back in the day, if you were to erroneously send a sell order, say for 1 million shares of Home Depot at the market, it would go to the specialist on the floor, and the specialist would look at that order and say, is this correct? He'd verify that the seller really wanted to do this before putting the print together, and then he'd try to find interest on the floor to try to offset that. When you just send 1 million share sell order and just press the button here now, it instantaneously goes in the market. There's no human intervention and just simply knocks out all the liquidity that's there. This order not only didn't send it wasn't even routed correctly because it only sent the order to the NYSE, so it routed around the liquidity, the orders on the other exchanges. So if you were bidding on Edge, if you were bidding on ARCA, if you were bidding on NSDQ, for Home Depot at $90, you didn't get filled because this order routed around there. It only routed to the NYSE. Those are typically called ISO orders, intermarket sweep orders, where they route around the rest of the liquidity. So they only wanted to transact on the NYSE. So two things here: fat finger probably, and also inefficient order routing causes this. So not really caused by high frequency traders. People say, oh, this is high frequency traders. This is more fat fingers that cause this type of stuff.
Actually, I think it was Garrett piped in kind of an interesting strategy where I don't know, high frequency traders will put bids and offers at like 9.99% on all the stocks.
Right.
Knowing that if the algo comes in there, that theoretically, if they buy at that level, they can't get it busted. Now, obviously it fell more than that due to the liquidity, but I think this is something that's just we've talked about on High Frequency Friday. We talk about it with Ezra Rappaport. We talk about market structure all the time, and here's an instance where you get a real life example of it. So trading in Home Depot, If you got busted, you got sales off, you got buys off down there. Guess what? You don't have them. Spice is talking about it sold, it won't bust. It happened to me on Target, and they refused.
He's
So do you know what
he's
Spice?
saying on the other side of the trade that the sells aren't busted. That's not true in this case. They're both the buy and the sells were busted. So if the institution, whoever sold this thing down at 93.32, that sale would have been busted. Anything below 93.33 or at
Okay.
93.33 was canceled. So both the buys and the sells were busted. This used to be very subjective, actually. This is something I think they've actually improved the way they handle these things now. Because the way when you used to have erroneous trades 10, 15 years ago, it used to go down to the floor. Trader would ask for a bust or adjust. Remember that, Joel? You could
Yep.
go and ask, and then they would go and say you could actually counter. Your broker would contact the counterparty of the person on the other side of that trade and say, look, we want, this price isn't fair. We want you to adjust the price. Guy on the other side would say yes or no. If he said no, then you could take it to ruling. So it would go on the floor, and they would actually rule on it and say basically whether this trade is erroneous or not, and then it could bust the trade or the trade would stand, one or the other. The ruling would typically always be bust or they would cancel it. So it was always a risk if you took it to ruling. And I can remember, getting calls, on the other side too, where I'd get filled 50 or 60 cents below the market and they'd want to take it to ruling. And then it was subjective. It was up to the person on the floor. Here they have guidelines, and I'll just go try to find this link actually really quick for the chat here because they are published guidelines and they aren't rules, they are guidelines, so they can make exceptions here. Especially, it's more for if there's news, because if Home Depot all of a sudden came out with lowering guidance or something like that, then you would want to have that capability to not bust these trades because it wasn't just some fat finger, it was trading off of news.
Yeah,
So
remember that? We used to be able to call down to the floor and complain. Can you imagine that?
yeah.
You'll
Oh,
be
yeah.
able
And
to do
they
that
sent around.
now.
Goldman was good because we at Bright Trading we cleared Goldman, and if I got a bad fill, I felt like a fill wasn't that great. I'd call up Goldman. Goldman would send a runner down to the floor, down to the specialist, and say, "Look, this guy thinks he should have got filled here, and take a look at this." And sometimes they actually would give you the fill, or they'd give you an adjustment if you felt like you got a bad price. So it was cool back then. Now it actually there's fees for doing stuff like that at Goldman. I think even to inquire about something, there's a fee like $250 or it's something like that, and that's broker to broker. But for the most part, you usually, if you're within these guidelines, it's pretty set that you're probably not going to get your trade busted. Here are the guidelines. I just posted them in the chat if you want to check them out.
Okay, one more thing, and then we'll move on from this subject. Question from One More Shot. How will that affect Home Depot today? Will it have a negative effect or positive effect or nothing at all? And I think I have to go with the latter, nothing at all, Dennis, right? It's past history.
Well, it's two considerations. It depends on who bought the stock down there, and you might have came in. And I'm just, thinking outside the box here a little bit on how it works. If you bought the stock below 93.33 and took it home because they busted these trades after hours, if you sold it, so if you bought and sold it,
There you
then
go.
all of a sudden now you've got a naked, you've sold stock and you didn't own it because they busted your buy. So now you're naked short the stock. So then you got to be coming in here this morning and buying the stock at the open. So that could put a little bit of upward pressure on there, but it wasn't a ton of stock. I mean, Home Depot trades, millions and millions of shares. So I don't think it's going to have that much influence. The other thing that's going to influence Home Depot today, though, is the Lowe's
There
earnings,
we go.
obviously.